It's Monday, March 31st, and on Friday, markets had their second worst day of the year. The sell-off continued after hours, and we had a crazy, horrible open yesterday evening, and now markets are doing kind of okay. Markets and crypto have generally recovered. My portfolio is in a neutral state from the end of the day Friday, and so the big question this week is we have Trump tariffs on Tuesday. I forget, what is he calling it, Liberation Day or something? And then on Friday, we have NFP, which is the most important job numbers of the month that are reporting. And Jerome Powell and his friends are out in full force after that. So I wonder what they could be trying to do to spin the narrative. Big question is, and we're at an inflection point for markets, is this like the start of 2022? Or are we going to take the path of, say, August of 24 and have that V-shaped recovery? I'm hoping for the latter. Join me today as we explore stocks, commodities, and crypto together. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Okay, we're back. And before we get into the charts, I just want to share a little bit of info on what I use to get ready for every week. And if you're not using, if you're not using Forex Factory, I highly recommend you add this to your favorites. I've got it saved in my browser. And at the top here, you've got a calendar. You can set it to your time zone. And you can see all the major financial announcements that may impact markets coming up for the week. And you can get data on those. This is expected. This is where things actually come in. Those marked in red, those are going to be most important to the market. And this week, it's really that cluster on Friday of the non-farms unemployment rate. And then the Fed, like I said, is coming out right after because they might want to shift the narrative or augment the narrative in some way. And I'm going to go back to webcam. Excuse me while I'm figuring out this whole switching thing. It's a lot going on. I've got tabs all over this big wide monitor, but bear with me as I'm learning. So we are seeing quantitative tightening taper off. And not too far behind that, quantitative easing really starts to kick in. And we haven't seen much of that since 2020. So that could be a tailwind for markets and definitely something to keep your eye on. The other thing that I just wanted to discuss real quick that's kind of shaking up some segments of the market is this idea of deglobalization. And yes, in the long term, that can hurt markets. But in the short term, all that infrastructure needs to be reshored. And there's all that investment in the infrastructure, which can really boost markets. So that and quantitative easing, rates coming down, those are all potential tailwinds for the market, despite all the fear that's out there right now. Now, that being the case, I'm not going in like crazy on these dips. As I mentioned in the intro video yesterday, it's really about successful swing trading is about playing those extremes in the markets. And yes, this has been an extreme pullback, but for me, that was at the end of 2022, beginning of 2023, building really big positions. And I'm still fairly high risk in my portfolio. I'm also managing my parents' retirement portfolio, and they're 88. My mom's 88, and my dad is turning 91 in a couple of months. And they did not save enough for a retirement. I got into, I would say, for someone in that age bracket, some fairly risky positions at that time. And that's paid off, and it's grown by many multiples. But now I'm starting to rotate that into some more defensive and conservative plays. So I've been trimming since December, and I've moved a lot of that into XLV, which is healthcare, which has been in a consolidation pattern, hasn't had a run, but generally kind of late cycle, starts to do well. I know it got beat up because people were thinking with the new administration, with RFK, healthcare would really get hurt. We'll see how that plays out. I started rotating them into gold and silver. I think I'm going to start trimming some of their gold position because gold is starting to feel a bit toppy. I think silver still has more to run. We'll look at that in the charts. And then around that time, I moved them into China stocks too, because China was moving out of recession. And we've seen, the extreme run of like Izomi, I don't know how to pronounce it. You'll have to excuse me. But Baba's done really well for them. Baidu's been a bit of a laggard. It's not as well supported by the CCP. But anyway, it's just something to start thinking about is as we are in late cycle and you're holding on to assets that have run a lot, what are you going to rotate those into? You don't necessarily have to go to cash. And some of the most successful trading is looking for those opportunities of swapping one asset for another. Everything's a pair. I mentioned that yesterday in kind of the overview. But what's overvalued that I'm holding in my portfolio that I can trade for something with good fundamentals that's undervalued that hasn't run yet? And looking for that transition is how you really can supercharge a portfolio over time. Anyway, that's enough of an intro. Let's get into the charts. And I'm going to pull up TradingView here. And we are just going to start with the S&P 500. We're going to get into commodities and crypto and all that good stuff. But this is the leader of the market as an indice. So I just want to start here to give us a baseline. I'm on the daily chart just so we can see if there are any gap fills. And this really gives us a lot of clarity. But we did set a new low, and that's not necessarily a bad sign. We often see a first low get set and then a lower dip down before things take back off. And I mean, if we just go back in history, you can see, I mean, these were higher lows here. But a lot of these dips, you can see kind of a standard 1, 2, 3 there. God, my computer's slow. Dip, secondary dip, and then we take back off. So not that uncommon. The markets like to use that to create maximum fear and to shake people out. So not something I would be concerned about. In terms of levels, 54.75 was actually or 54.70 was my next support I would be watching. And then the major support is at 5,400. If we break below 5,400, then for me, that would be a cause for concern that we are in more of an early 22 style market. But right now, things are looking good. Now, if we do measure from the top to the bottom, you can see that bounce retracement made it to about the 382. We didn't make it to the 50%. For a stronger bounce, I would have loved to see that go above the 50%. But let's see what we do here in terms of holding this low this week, hopefully not getting below 5,400. I think that's really something to watch as a leading indicator to see if we're going to do, something more like this, or if the market just starts going like that, which I don't think any of us would like that. But a couple things to talk about. So that structure over the next 4 to 6 weeks is really going to tell us if it's recession time or if there's a longer correction. We talked about some of the tailwinds behind the market in the intro, but some of the things on the flip side to look out for, we did have the 2 and the 10-year yield curve on invert. I think it was like 6 to 8 months ago. So this is around the time frame where we would see some of the follow through from that. And then also just looking at consumers, I think the statistics that came out last week were that roughly 12 to 13% of Americans are now behind on their car payments, and a staggering 6.1 million Americans are behind on their mortgage payments. So that is 6.1 million households that could be foreclosed upon. So we really need lower rates. Otherwise, there's going to be a bigger correction. And if you lived through the GFC or any corrections before that in the early 90s, you know that those big corrections are usually land-led, because land is the biggest, and by land I mean real estate, not just land, is the biggest asset globally. So Fed slowing QT is the precursor to QE. We're hoping for that. We're hoping for lower rates, and we'll see what these charts do. So one last thing here on the S&P, the difference between these other drops and where we are now is that we had this support line that has been holding us up since all the way down here in October of 2023. We did break below that, and we did break below the 200 moving average, and that is what gave us also a bit of our, as well as the 382 gave us a bit of our resistance. So that's something key to get it above and hold. And if we flip over quickly to the Nasdaq, you can see the Nasdaq had a bigger correction. Generally, the Nasdaq has led these moves and made bigger moves because of how tech heavy the Nasdaq is. But we're in a similar position where support, although the support was lower, has been broken. We did get slightly above it, but we bounced off the 200 MA, and now we're recovering on the Nasdaq. This, as well as XLK, can be early warning signs, and there isn't much support for the Nasdaq here. I mean, we've got a little bit here around 18,500. But really, I would love to see a V-shaped recovery on this and a big weekly wick to the downside to show us that we are going to recover from this sooner than later. Now, I will say, if we are just taking a holistic look at markets and tech in general, over the next 5 years, I think tech is going to do really well, although it is getting weighed down by all the geopolitical tension and reshoring currently. But there is no slowdown in the need for AI, for compute, for robotics. We're seeing so much efficiency gained across numerous industries, and I don't foresee a slowdown for that or the demand for compute. I think the big hurdle is going to be generating enough energy at a low cost to support all that compute. And you can see a lot of these tech names that are starting to pursue nuclear projects, small Gen 4 localized nuclear reactors, much like China has been building out for years. We are definitely behind them, but I think the nation that can get the nominal cost of electricity to as close to zero as possible is going to win this tech and robotics and AI race in the next 5 to 10 years. So that's something to watch out for. Also to be looking out for potential plays where you could invest in some of that development, I think is something to keep your eye on as we move into 2026, 2027. Okay, last major sector to look at here, and this is actually on the monthly chart, and this is XHB for the home builders. And the only reason I bring this up is because the home builders are usually a 12 to 18 month leading indicator for a bigger market slowdown. Now, this hasn't totally broken support right here yet, but you can see in October, November, right when the rest of the market started rallying, we started seeing a slowdown. So XHB, I think, is a great chart just to keep tabs on, maybe check it every month and just see where this is doing. Are we holding support? Are we breaking down? What is this potential leading indicator saying about the future of where the market is heading? Okay, going back over to the DXY, it has been trying to set a higher low here, but there really has not been much strength in this rally whatsoever. And it almost, there's a support zone here from about 103.50 to 102.50. If it breaks below that, I suspect my longer term outlook for the DXY is, even if we rally up to this zone here, is that we're going to go back down. God, my drawing skills suck. Thank you guys for bearing with me. Let's try that one more time. Even if it bounces up to here, I think we're going to get rejected and eventually make our way down to have the dollar fall, and that's going to be great for risk assets. All right, let's move on to SMH. So SMH, this is the Semiconductors ETF. It's just kind of a conglomerate view of all the companies in the semiconductor space. And as the semis go, or I guess as NVIDIA goes, so has the market as of late. And if we put in NVIDIA, let's get NVIDIA up here. You can see as the market leader, the pattern is very similar, although SMH is beat down a little bit more because a lot of the smaller names have really lost more market value than NVIDIA. But I think it's important to note there were huge sell-offs right here on NVIDIA. And this area right here is looking more and more like Wyckoff distribution. We had that initial drop, that bounce back up, and there was huge dark pool activity around this point. The question is, can NVIDIA hold these key levels? I would say $97 to $100 would be my line in the sand, and anywhere below that would be pointing to a further breakdown and larger downtrend. And I'm curious to see how this plays out because I don't see the demand for their GPUs going down. It really is amongst the tech leaders an arms race to see who can build out the most compute for their different AI inference and real-world AI projects. So the demand is there, but we'll just have to see how this plays out. Maybe there will be a divergence in the market between the demand and the sentiment. I don't know, but definitely keep your eye on this one because it is going to have a bigger impact on the broader market. Now, personally, I got into NVIDIA a couple of years ago. I got out of my position earlier than I should have. I was still happy with the gains, but I would not be entering this at this point. I know a lot of people are still bullish on NVIDIA. I get it, but they're now the number 3 company in the world. They were number 2. I think Microsoft passed them last week. They're not going to grow by the same multiple. The time of the 8x in NVIDIA, 10x in NVIDIA is over. At this point, when they're the number 3 company in the world, there's just no way that they can continue to grow at that clip. And I'm really looking for positions where I can do a 1x to a 3x of my investment. And NVIDIA, unfortunately, is not that place. So let's just move on to gold. And gold right here, you can see this is our level at 3,000. I'm on the weekly. Let's go back to the daily. Apologies for that. That was just to see the uptrend. So gold, you can see right here at 3,000. We hit 3,000, that psychological round number on the nose. I really thought we would have consolidated more around that $3,000 mark, but we broke right through. My ultimate target on gold would be way up here at 3,600. This is kind of an initial target. And if things go really bullish for gold, 3,600 could be that target. I've already started, like I mentioned with my parents' portfolio, starting to trim some of that position, because if we look at it on the weekly and you take this run that we've had since the beginning of 24 over the last year, compared to the historical period, that is very abnormal. And as things really rocket up, this had a huge weekly or monthly candle, it's just at a certain point not going to be sustainable. Now, the interesting thing I want to point out on gold is that digital gold, Bitcoin, has really been lagging analog gold. And one interesting thing you can pull up on your charts, if you compare gold and Bitcoin on the same chart, you will see that when gold goes on these runs, so up to October 24, Bitcoin, this was when Bitcoin had its huge consolidation. And then when gold consolidated, Bitcoin ran. And now gold started running again in January, and Bitcoin has been consolidating, moving slightly downward. So it's been interesting to see how capital flows are moving into not both assets at the same time, but seemingly are flowing into one asset, consolidates, moves into the other asset. Then this one moves, Bitcoin consolidates. So we'll see how long that trend holds. But this is an interesting one to watch for a potential pair trade, because you could, if you were watching these, you could be in gold here, then you could transition into Bitcoin, still get upside, and then transition back into gold. And you would just have to really watch that pair trade. Invest Answers, who I'm a big fan of, he has some great indicators. If you go on investanswers.io and go to his indicator suite, he has a pair trading plugin for TradingView that I haven't used that much, but I know a lot of friends that use it. That's really great. So something to potentially check out. Silver has not run in the same way as gold yet. This is also on the weekly, and you can see we're coming up close to making a double top. If we break that $34 an ounce on silver, I think we could run all the way up to 45. So this is one to keep your eye on. It usually lags gold a little bit, but it's looking good, and it has that potential all-time high breakout. So another commodity to keep your eyes on there. Okay, let's move on to US oil. I don't know what TradingView is doing, guys. It's being really funky. I have to scale the chart before they let me move. Anyway, moving on to US oil. Okay, since the time of 2022, oil has been coming down, but we've always found support around this range here, around that $66 mark. That's because around that $60 mark, oil is no longer profitable to drill. I think it's right around that $60 mark. So going back, you can see all this support that's come in since 2021. Obviously, the cost to drill was less in years past, as everything has gone up exponentially in cost. But you can see since the Biden era, we've also had this descending resistance. And I think this was an effort to work global geopolitical deals to keep the price of oil down to help with inflation. So this is one, because it's so beholden to geopolitics. I don't like to trade that much because you can chart it and you can be fairly certain and you can set your stops below this, but there are still so many variables in it. So I like to watch oil just to see what's going on in terms of input costs into the economy, but it's not one I personally trade that much. But if you are interested in looking at it, it could be one that you could play the swings on. And if we break this, bad sign for inflation potentially, but that could signal that we're going all the way back up to 92 if we break this trend line. So keep your eyes on that. Okay, moving on to Tesla, everybody's favorite. God, the sentiment is in the toilet on this one, but by golly, I really believe in it right now more than ever. And not a political statement, not a statement on Elon, but just a statement on the innovation, on the things they're developing with robotics, with battery technology, full self-driving. It's got so many tailwinds and potential great revenue streams for the business coming up that outside of Bitcoin, between now and 32, I think Tesla has the most growth potential. And all this negative sentiment right now that has dragged the stock down, I think is a great buying opportunity, but there are some key levels to watch. So let me make this a little bigger so we can really dive in and dissect the levels. So I've had these zones drawn for months, and they relate back to past all-time highs. And as we broke out back in November into December, on this rally up, I was selling some covered calls. I didn't want to sell my Tesla position, so I was selling those covered calls. And then around here where things were breaking down, I started selling some of my Tesla position around 400 to 450. And I just started re-entering, and I was watching these levels. So this orange zone was kind of my first entry for a nibble. This yellow zone here is where I got in a bit harder. And then this green zone around that 220 level is where I really bought a lot more. And we've since bounced from there. And I think it's important to talk about layering, because you don't want to deploy all your position here and then have no capital here. It needs to be like a pyramid where you're just getting in a little bit, you're seeing what the market does, especially if you're trying to catch that falling knife. Deploy a little bit more. And then here we had close to a double bottom. We knew that 220 was great historical support. So that was the point to buy. But now we came up to the 200 MA and we rejected from that. There was, if we go on the daily, a little gap fill here at 250-ish. And we closed that today and have since moved back up. And there's also this descending trend line that goes way back to the peak here in July of 23, cuts all the way through here. And that seems like it's providing a little bit of support around these levels. So I'm interested to see if we recover from here or if we go way back down to this trend line. I'm just going to switch to the weekly. And I don't even like talking about this because it's pretty darn low. But if we go to the COVID lows and follow that all the way through, there's this trend line. And you need 3 touches of a trend line to make it a valid trend line. And there is a chance, because there is so much negative sentiment, sales numbers aren't looking great. You know, his involvement with politics, Elon's involvement with politics, and being distracted from the company. I'm not sure what's going to happen on earnings. And if we break down from this 250 level and this trend line here, there is a chance we could come in to tag this around the $180 level. Now, the question for you and me both as swing traders and investors is, do we want to hold through that? And I think there would be very solid support around this time frame here. The question is, can we hold through that pain? Or is there an invalidation level where maybe you want to trim your position to try to reload down here? So let's zoom back in and look at those potential invalidation levels. Okay, so looking at potential invalidation levels, of course, I like seeing this support line held. If we bounce and break above the 200 MA and break this high, say we set a higher low here and go off to the races, great. Then we know things aren't dropping down. For me, if we break this low and then bounce off and say reject off that 245, 250 level, wherever this line ends up being, then that would increase the odds for me that we are going down here. Currently, my entry price from this staggering in positions down to 218 was my lowest buy. So my cost basis right now for this swing trade is at right around $230. So that puts us about right here. And so I would be risking some of that position to see if that lower swing trade breaks. If we break the 210 level, then I would be considering scaling out just a portion of it, because you never know what markets are going to do, and then redeploying down at this trend line. The last thing I will say on Tesla, I mentioned this briefly already, but outside of Bitcoin, for me, this stock has the most upside potential looking to 2030, 2032. So this is one of the few stocks right now where I'm actually looking to build a position and increase my number of shares, because I really believe in the vision for these different revenue streams and lines of business moving into the future. Okay, let's move on to everybody's favorite, Bitcoin. All right, guys, we're already at like 25 minutes, so I'm going to try to be fast. So you notice on Bitcoin, I'm still on the daily charts, because really for swing trading and building positions, we're looking at the 4-hour or we're looking at the daily chart. We're only really zooming in to the 1 hour or anything below that to try to really scalp entries when we're looking to nail a price, right? So we have 7 days of selling, and then we see a bounce today. That is not surprising. If you follow GAN swing analysis, which, by the way, this orange line I have here, this is the TIA GAN swing indicator. It just kind of takes out some of the noise and gives you the true swing points, so you can do your GAN swing analysis on the charts and see when a potential swing is broken in either direction. This is from TIA Crypto. I think it's just TIAcrypto.com, but Jason and Michael, two brothers from Australia, they have a great YouTube channel, and I love this indicator as someone who uses GAN swing analysis in all their trading. But one of GAN's rules is the 7-day rule. So if you have 7 bars in one direction, in this case 7 days, between that 7 to 9 bar mark is generally a point where you will see a reversal. And on the GAN swing indicator here, I have it turned on, so it shows me if it's 7 or more bars that the number will appear. So you see we had that here, then we had that bounce away. Here we're having another bounce away. Try to see if I can find another example. Yeah, here, another one. 7 bars down, bounce. Like clockwork, 7 bars up, and we start a big retracement. So just a very simple thing you can add to your toolkit that works for stocks and crypto. I haven't tried it as much on commodities. I'd be curious to do some back testing on that. But anyway, so Bitcoin came under a bit of pressure the last few days because there were hackers selling a bunch of crypto. I think Bitcoin, Ethereum, a few other things. I haven't really dove into all the details of the story, but I know that was happening. But over the weekend, I think it was holding up fairly well. And the relative strength in these charts compared to the SPX, where the SPX was making new lows, and Bitcoin is holding up here, I would say is showing relative strength and is making me pay attention to this chart that, hey, maybe gold is getting exhausted on that run, might come into more of a consolidation, and maybe it's Bitcoin's time to go again. Now, we always want to be looking at both sides of the market, and there is still a bit of negative sentiment out there, but we have so many tailwinds, banks being able to adopt crypto now, the regulatory environment is shifting, so that's going to take some time to trickle through, but I think that's all going to be a tailwind for crypto and Bitcoin in particular. And one thing I just want to point out on the charts, just to get you guys thinking about exiting at the appropriate times, is this period here where we had our double top. And one thing that's a very simple indicator for the double top is just looking at the RSI. So again, we're on the daily chart. And if we just draw something here from when the RSI dropped below 30, which is oversold, and we just draw a little bit of a trend line in, you can see that we respected that uptrend the whole way. And then we kind of dipped through, broke back above, and that was right at our first peak, and then broke back below. And then when we rallied back up, we had that bearish divergence where we weren't able to break above the line. We didn't make new highs compared to that peak. So that's telling you that momentum is coming out of the market on both these peaks. And so that's a very simple indicator there on RSI that everybody can watch, put on their charts to let you know that, hey, maybe now, because we've had this big divergence, price is going up, RSI is going down, it's time to exit. And then we had a downtrend on RSI that's just starting to get broken. And so now we have new underside support. And you can watch this with this rally. We're right on the line. Are we going to hold this line? Are we going to bounce from here and continue the uptrend? Now, Bitcoin still has a lot of work to do. It has to get above these levels, above 88.5. And then the line in the sand for me to really say we're testing new all-time highs is right here at 91.5 to 92,000. That would get us back in the range. So I would love to see it get up there and hold that, get above some of these trend lines, break this downtrend right here. And just the other thing I'll say about sentiment, and I don't want to make this video too long, but we had in early January, we had Trump coin launching, we had Fart coin making all-time highs. I mean, just so many ridiculous things out there that are generally a topping sign in the market, that between peak euphoria, your friends asking you about altcoins, those kinds of things, that's more of a social indicator to just keep your eyes on and be like, okay, things are a little frothy. Maybe I should trim a little bit. Bitcoin's always hard for me to trim because I believe in the long-term thesis and I always want to hold some Bitcoin. But, we had almost a $30,000 swing top to bottom. You can really increase your holdings if you're getting out at the right moments and getting back in at the appropriate moments. Okay, and the very last thing I'll say on Bitcoin, I'm just going to switch back over to the web browser here, is just keeping tabs on the crypto trading volume. So this is how much trading volume is in the markets every day. And you can see in November that really started to spike with the price. And then we had our second top here in Bitcoin, which made a slightly higher top, but the trading volume was lower. So you can also notice a divergence here and this downtrend. And until this trading volume chart starts to get into a reliable uptrend, breaking these old tops here and eventually setting new trading volume highs, we're not going to have sustainable inflows into Bitcoin and crypto and the broader market. So just something to keep an eye on. Where are the money flows? What's happening? And you know what? That reminded me one last thing on the Bitcoin chart that I really wanted to show you guys is global M2. And I think this is a great indicator and it tracks so well with Bitcoin. So I have global M2 here as this green line, and this is offset by 108 days. So the reason it's offset by 108 days is because that's generally how long it takes money from money printing and global M2 rising to flow into the markets. And you can see how this chart has tracked really well with Bitcoin's movements. I won't go back in history too far. And so what is this indicating to us? Could we have another potential dip to double bottom and then take off? That's certainly possible. Some people will prefer a 71 or 72 day offset with M2, but I personally wouldn't worry about this dip too much unless you're heavily in altcoins. They're just going to get slaughtered. I don't know how much more they can go down from here. But altcoins aside, we know that, within a couple of months, we should start seeing that uptick. I am hopeful that with tariffs on the second, kind of that seasonal turnaround time in April, May being good months, that we actually see this uptick a little bit sooner. But right now, we're mirroring this bump in global liquidity in M2 very closely. And interestingly enough, if you bring this back the 108 days, this uptick coincided right with Trump coming into office. So I don't know exactly what that means, but nation states across the globe started printing money and increasing global M2 right at that period in time. Okay, so I'll turn M2 off because I don't want that on there all the time. But we'll move on to MicroStrategy. I had Solana up there. I'm going to skip that for now. There are just too many charts to get through. But moving on to MicroStrategy, another fan favorite. Saylor stacked huge again today. He had a buy of 22,000 Bitcoin. And what does that put him at? Like 530,000. Anyway, he's well over 500,000 Bitcoin now. So MicroStrategy had that blow off top here. I won't get into it in today's video, but I think it's very important to start training yourself to identify blow off tops. And in this period here, both on this spike and again on this spike, I was selling covered calls that then I bought back around the lows here. And that is a wonderful way to make extra money on your holdings. Again, more than we have time to get into today, options trading can be a bit risky and you need to be aware of those risks, but I'll make a dedicated video just highlighting that trade because this was one of my most profitable options trades to date, selling those covered calls up there. Anyway, MicroStrategy had all that hype. We have this downtrending resistance. It did find support at the 200 MA, so it's actually holding up stronger than some other assets in the market, and it has shown relative strength. And like Bitcoin, it hasn't set new lows like the S&P 500. So I am watching this closely. At first, I thought this would repeat kind of that 2021 cycle where MicroStrategy had an early top and then later it'll rally and it'll make a lower top that's close, but it doesn't quite surpass that last one. But they are stacking so much Bitcoin. I think they are maybe moving in the direction of becoming a Bitcoin bank or offering some kind of lending services against your Bitcoin, expanding their business in that regard. So that will be really interesting to watch. I mean, some of the posts Michael Saylor has been making too, just reading between the lines about exciting things coming. Again, going back to Invest Answers, James from Invest Answers, he said something funny the last couple months. He's like, you see Saylor, and since like November, he's been smiling so much in videos and photos. You never saw the guy smile before. He's generally very stern and serious. So maybe, he knows something that he just can't share with us yet. But again, the truth is in the charts. And right now, I would suggest, despite all its volatility, I mean, we were at 350 almost last week, and then we started at 275 here on Monday. That's a fairly big drop. But volatility, like Saylor says, is vitality. And if you can play those swings and get in at the right moments, this can be a life-changing stock. It's not going to do what it did from the lows, but something to keep your eyes on because it may have more to run. Particularly if we can break this trend line, that would be a fantastic sign of strength. Okay, I was going to cover Bitcoin miners a little bit, but again, we're running out of time, so I'll keep this really quick. There was a deal announced today between Hut and Trump's sons that made that miner rally more than the rest of the market. I don't really like Hut in terms of their efficiency and what have you, but that was one that was outperforming. The two I am still watching are CleanSpark, even though CleanSpark has been beat to hell, and Marathon. So two slightly different plays. Marathon is kind of copying the MicroStrategy playbook, and they have a huge Bitcoin holding now. And right now, Marathon has the highest ratio of every dollar you invest going to Bitcoin. I think only 10% of each dollar you invest is going to the actual infrastructure of the company. And all their servers and what have you. The rest is going directly into their Bitcoin holdings. So it's at great value levels. We did break these lows. There is still this downtrending resistance. So until it can get above this line and prove they can hold these lows, I mean, this could just be Wyckoff accumulation where you have that last little flush out to shake folks out of the market, and it could run from here. So definitely one to keep your eyes on. CleanSpark. So I got into CleanSpark in 2022 for around $2 to $4, and it was a wonderful ride into the $20 range. I was selling covered calls on these spikes and then buying them back in this range here. And then we broke down, and it's tried to rally back up and just has underperformed since. And I have pretty much gotten out of all my CleanSpark around the $13 mark. Wish I would have sold in the 20s. Asked me earlier on in the bull market, I thought this would have gone much higher, and maybe it still can, but it's going to require Bitcoin going on a parabolic run to 150K or above. And the one thing that's making this level that we hit today seem interesting to me is this support line. So this support line goes all the way back to December 22, the bottom of the bear market where I was first buying. It provided support here in March when we had the banking crisis. Then in late 2023, when the market was depressed, provided support. And then we ran away from there. Early 2024 was a great time for miners. I wasn't following my own rules on exiting. But that's what happens when you get greedy and you think it's going to run to $70. Anyway, but we're finding support on that level now at about 650 and change. And so keep your eye on this one. I'm not going to buy it right now, but if I can see a V-shaped recovery and breaks of these tops and a change of trend, that might be an indicator that miners are going to have another sign of life. Now we're getting to the exciting stuff. Hood or Robinhood markets. Now, this has been a great play for me. I got in, again, this was one that I got into around end of 22, beginning of 2023. And I was lucky to build a position during this consolidation range. And it's run from that $10 mark all the way up to 60, what was that, $7 almost in late February. We've since retraced a bit, but we're back to almost all-time highs. And the reason I'm saying Hood is interesting is not just because of its trading business. It is a wonderful platform. It's so easy to use. For a while there, I was actually treating the Robinhood app as my bank because you were getting great APR on your cash that was sitting there. They have their debit card. They used to offer wires and they stopped that. But last week, so let's go into it. Right here, you can see we had earnings and there was a huge spike on earnings. And then this is when the market turned over. And Robinhood really, like a lot of other great tech names, had a big retracement. So we went down 47-ish%. So a pretty big drop. But the interesting thing is their announcement last week where they announced 3 new products and they're really changing their nature of their business and they are trying to take market share away from banks. And I think this is really interesting. So first, they have Robinhood strategies to replace a financial advisor or to make a financial advisor accessible to everyone through both their experts that they have on staff and an AI model that targets things or that builds things specifically for your age range, portfolio, investment goals, that sort of thing. Not a product I would use, but for a lot of casual investors who want to take more ownership and don't know the markets and don't study charts every day, I think this is a huge value add. And if you have over 100K, there's zero management fees. I think it's like a flat $250 a year or something. Just remarkable when you think of what you would pay an advisor. Then they have private banking. So they're turning their app into a full suite of banking services. They don't have branches and ATMs, but they're offering cash delivered to you like Uber Eats. So you can order cash on the app and a delivery person will be to your house in 10 to 20 minutes with the cash you ordered. I personally I can't remember the last time I've had to get cash from an ATM, but they've crossed that hurdle. They're offering banking. Their fees are historically so much lower. So the market share that they can take away from Bank of America and all these other institutions that just charge ridiculous fees, I think is going to grow their business by many multiples. And then they also have an AI investment assistant for making options trading a bit more accessible to the general public. So again, I'm interested to check this tool out. Probably not something I would use or many of you here on the channel would use, but they're really trying to democratize investing, educate investors, and they're trying to take a chunk out of the business that these big banks have had locked up for years. I added quite a bit to my position here on this pullback. Like the rest of the market, the announcement was actually here. So it rallied after the announcement, and then we had continued weakness at the end of last week, but it is showing relative strength, just like Bitcoin, just like MicroStrategy. And now the question is upside targets. I don't have any in mind right now. That's a bit of research I can do, but I want to look at the total addressable market and what a realistic percentage is that they could take away from more traditional banking institutions. And that can give us something to aim for. But in terms of risk to reward and potential future growth, I am really excited about Robinhood. And maybe I'm a bit biased because I use the app and I really enjoy the experience. So I do have to keep that in the back of my mind because we don't want to come to investing with emotion. And I would say Robinhood and Tesla are the two where, even though I don't own a Tesla, just looking at the tech they're developing in both these fields, I get excited about it. And that makes me believe in it. But I have to let the charts lead the way. So just trying to remind myself of that as we move forward. Okay, let's move on to the last few charts. Okay, Micron Technology is one that I've been watching. So they provide critical memory components to a lot of AI compute, and they have been back ordered for months. There's lots of demand, but the chart has gotten really beat up since the middle of last year. And so since it got so beat up, but I knew the demand was high, I've been watching this stock, and I actually entered down here, and then it rode this swing, and then I was like, oh, it's kind of in a range. There were two little ranges here. And since this period here where it broke back down, I've been playing the swings on these ranges, and it's been quite profitable for just trades over a week or two at a time, and just having it go between that, mid $80 level to about 115 or so. I mean, at the top of the range, 113. Now you will notice we've had this downtrending resistance. On the daily, you won't see it, but on earnings here, it actually spiked up to about 108. So we hit this trend line right here. So there does seem to be more selling pressure coming in at lower and lower prices. But today, the lower end of the support range held. I bought back in here again, and I'm going to see where this swing goes. And this one is very replicable. And with any trading we're doing, particularly on a shorter time frame like this, like the longer term trade you do, the more margin of error you have, or I guess the more you can ride out those undulations in the market. But this is such a replicable trade because you have this key level here at 84. We hit it on the nose and bounced off it. So if you can buy around that level, you set your stop loss just below it, you have a very low risk trade, and you have high potential upside to, if we hit this first trend line, that'd be 102. If we hit this one, that'd be 107, just projecting out to a rough date range. So MU, definitely one to keep your eyes on. Longer term, I don't know if it's going to roll over or if it's going to pick back up momentum. If the rest of the semis break down, I suspect this will break down alongside them. But demand continues to be high, so it's one to watch. And even if it breaks down in the medium term, I think there will be more to run on this down the line. Okay, moving on to Celsius, CELH. And I'm going to go back to the camera real quick just for a quick public service announcement. So there are certain stocks that I don't like to invest in. Like normally I invest in disruptive technology, things that I believe will have a lot of growth potential. I generally don't invest in pharma because I don't like some of the things they develop. And I generally don't invest in vices, so cigarettes, sugary drinks, that sort of thing. That said, I love a good can of Celsius. It's a healthier alternative to a Red Bull, good source of energy. They're trying to do something better in the energy space. So shameless shill here just because I'm holding the stock. Oh, that's so good. So good. Okay, going back to TradingView. All right, so Celsius. This stock had grown like crazy, and then it had this double top in about a year ago in 2024, February, and then again in May. And they started having distribution and growth problems here, just not getting into enough vendors. And investors feared that the growth trajectory for the brand that they had hoped for wouldn't be sustained. And so this stock has been beat up for well over a year. And if we're looking like on the weekly, on the mean reversion chart, again, this is another wonderful tool from Invest Answers. So mean reversion just means that everything kind of goes back to a baseline, kind of this middle range of trading volume. And when things are extremely oversold or extremely overbought, that's your signal that things aren't sustainable and they're going to revert back to the mean, and it's time to trim some of your position. So I had been watching this for a while. There was a buy signal on the weekly, but the trend hadn't changed. And around $22 after the second buy signal, there was some confluence on the daily where I was like, okay, it might drop more, but I started entering into a position after this drop here with the gap fill. And we had this nice little island reversal. And if you're not familiar with the term island reversal, it's basically when there's a gap down and then bottoming pattern, and then you have a gap back up, making that island reversal. And gaps always like to be filled. We can get into that more in other trading videos, but they had earnings here where things shot up. And all of a sudden, earnings were positive, but they also had an acquisition. What was the company they acquired? Alliance Nutrition. which is a nutrition brand geared towards women who has great distribution. So it did two things for them. It opens up new distribution channels for them to get their existing beverages out, and it gives them this new brand to access the female segment of the market. It was a $1.8 billion acquisition, mix of stocks and cash, I think. But it was a great strategic play. The market loved it. We had this huge gap up. And again, those gaps like to fill. And so I had been building my position around 22. Truth be told, I did not deploy as much as I would have liked because I was looking at these support levels at $19. And then there was this air gap all the way down to 13. I'm like, okay, I don't want to get in too heavy and then lose almost half my position. So I entered about a third of what I wanted to deploy. And then I was looking for support down here, but we bounced before that. So this jumped up and I was like, that was a huge jump. It was like 37% overnight. I was like, I'm going to trim a little bit. And then we found support and I entered back in and I actually doubled my entry from right here. And now we've continued to ride up and we broke out of this range. There was previous resistance right here that we just broke above, but now are closing right on. So I think this range right here from 35 to 37 is going to be very important to watch. And then if we can break above that and 42, then we've got fairly blue skies all the way up to like $61. So this is an interesting one right now. Keep your eyes on it. Again, this range right here by the 35 and the 37.70, this could be great to just mark as like, okay, if it breaks beyond that, that could be an entry and your invalidation could be if it breaks down below that. So again, a very relatively low risk to high reward play right there on CELH. Okay, one more here is Decker's Brands. And again, this one, like CELH, is a segment I don't normally play in that much, but I'm looking for opportunities. And this is another brand I just personally believe in. I used to live in Santa Barbara. I know Decker's Brands well. They have Hoka shoes, UGG, Teva, many others. And they are a very, very well-run company. I've actually, my business has done some contracting work for them. But you can see how they've just been on this enormous, let's go to the week. Oh, we are on the weekly. They've been on this enormous growth trajectory. They've been taking market share from Nike and others. And they had an earnings call right here at the end of January on the 25th. And they noted some supply chain issues. And so that caused this initial sell-off. And I actually got in around this level just under 180 because I thought, oh, this is an overreaction on earnings this week. We're going to bounce. Well, then Trump tariffs kicked in. And some of their shoes are produced overseas. And so I started looking into that. And only 5% of their footwear is actually manufactured in China. There is some in Indonesia, and I have to look up all the places, but only 5% in China. So tariffs shouldn't affect their business too much, but there was already negative sentiment on the brand. I think also Brooks Running, who has been doing some rebranding, took some market share from them. So that was hurting them too. But this is one of those examples where I think the market overreacted. We are getting oversold on the weekly. On the daily, we have been way oversold, and mean reversion is starting to tick back up. And we did break into new lows here, just like the SPX did today, but we're finding support on that low $100 level. Below this 106, next support would be right at that even $100. I've been scaling in, I thought this was kind of the start of a bottoming pattern. So I've been scaling back in here to lower my entry cost. Again, this was too early, but if we had this big gap, I thought, oh, this could just be a quick bounce play. Anyway, mistakes were made, but luckily I didn't enter a huge position. And now with this entry down here, I was able to get my average cost down to $138. So I'm just at like right about this resistance line here, which I think we should be able to get back up to. But keep your eye on this one as it continues to form a bottoming pattern. As the broader market goes, I suspect it will help turn things around for them. And the fair market value by all analysts is still around $220. So even if we just go back to all-time highs, that potential gain from here could be just under and 10% if you bought the exact lows. But again, still great risk to reward. I think the company is very undervalued and one to keep your eyes on. Moving on, I'm just going to cover this one because lots of folks have been in Palantir. Now, Palantir had an enormous run. The PE ratio is off the charts. It is a great innovative company, what they're doing with their software for defense, but I do believe it's overvalued. So after this first peak here and this pullback, I missed the train on this. You can't pay attention to everything. So I missed this big run up and I got in with a small position here, and then it had one more run. And on the 19th of February, actually, Chewy, if you're watching this, comment down below. I don't have, because I wasn't doing a YouTube channel, I don't have receipts, but my friend Chewy, I messaged him because I know he has a big position. I was like, hey, this kind of has toppy signs. We had a 5% sell-off. I got out of my position around here, and then that drop continued. Now, long-term, I still believe in what this company is doing. It had all this great momentum. I don't think it's just going to go away. But I don't know if we're going to touch those all-time highs again anytime soon. I mean, we might be setting a higher low here, but this is not necessarily, if you don't have a position in Palantir, I wouldn't advise getting in a position now. This is one, if you entered it early, great. If you were able to tag this dip, awesome. This dip, yeah, maybe depending on what this does, but the risk to reward is decreasing. I don't think this is the time to enter a big position on Palantir. The other thing I will say, just in terms of the bounce, which the S&P didn't do either, but we rejected just below that 50% of the move. So to see this get into a position of strength, you really want to see it hold above the 50%, which lines up with a lot of these bottoms here. So you have some very clear levels to watch. If we can get above that $100 mark, and hold, that would put Palantir in a stronger position. And for this 50% tool, because markets often like to retrace to that fib 382 on bounce, or that ideally that 50% to show a stronger bounce, I'm just taking the normal fib retracement tool, and I have all the levels turned off except for 100, 50%, and 0. And then I just change the colors to red and green. So top half is strong, red half is weak. Just gives you a nice little visual. Okay, one last chart here. This is just all the major sectors, XLV for healthcare, XLF, financials, QQQ, semis. And what the purpose of this chart is when each segment is hitting the low of the day around the same time, that's normally either a bottoming signal, or when they're hitting the high of the day, it can be a potential topping signal. So you can see every sector today was hitting the low of the day around the same time. I mean, semis were just a little bit delayed on that next 4-hour candle, but we also had that on that huge sell-off day on the 13th of March. Other times in the market, when you see a sell-off in just one sector and the rest are doing okay, it shows you that that might not be a turnaround time in the market. So just an interesting one to keep on your charts to give you a little bit of edge to see if everything is selling off in unison or if it's just sector-to-sector rotation. And sector-to-sector rotation can be something awesome to play for swing trading. All right, so that was our first video. That was a really long one. My recording is over an hour. I can't believe it. This is going to take forever to edit. But I wanted to give that overview. There are many more stocks I'm watching. There are tons of cryptos that I'm playing as well, lots of alts. I think that's a little bit too much to get into for swing trading. I really want to keep this focused on the major market sectors and some leading names that have good potential. And I hope that gave you an overview of like what to keep your eyes on that has good potential upside, and what are the plays that make sense and which ones have already run and aren't going to be able to do the same multiples. But again, this is all contingent on how the broader market goes over the next few weeks. So really keep your eye on the SPX chart. See what's happening with tariffs and major news announcements, and we'll see you in the next video at the end of the week. I'll do a little midweek check-in, but it's not going to be in depth like this. Thank you guys for joining. I'll talk to you later. Bye.